Good afternoon, everyone, and thanks so much for joining us. We're just going to give it a few moments here while we let everyone join in from the weight room. Just to make sure that audio is working, can you guys just give us a thumbs up in the chat? That would be great. And that way we know that everything's working for us. And just a reminder, this webinar will be recorded. So if you do have to leave for whatever reason, not to worry, we are recording it. We'll get the recording out to you guys probably tomorrow. Yeah, so not to worry, you guys will get that recording to always view later at another time. If you have any questions throughout, please put them in that Q&A section and we'll make sure we get to them as well. We're also trying to answer any of the questions that got sent to us via email as well. And if you have any other follow-up questions, you can always send them to ir@victorysquare.com. I'll put it in the chat there for you if you have additional questions that we possibly didn't get to today. So we'll just give it a few more moments and then we'll begin.
Thank you so much, Abby. Thank you everyone for tuning in today. Hope everyone in Canada had a great Thanksgiving weekend, and anyone in the US, hope you just had a great weekend anyways. So for today, I thought what we would do would be for me just to do a quick kind of recap just with a presentation. I'm going to try to keep it short because there are a lot of questions that were sent in, and I'd prefer to get to the questions that were sent in and if there's any that are live. So I'm going to share my screen really quickly here. So yeah, I'll quickly go through just a recap on VST. I want to reference kind of like the last webinar and kind of a quick update from it, and then we'll get right to the questions. Let me just see this. Okay, perfect. Okay. This is the dissemination disclosure info. So for anyone that's new, Victory Square offers investors a unique opportunity to access high growth, early stage technology companies with the liquidity and flexibility of the public markets. One of the benefits for us is, unlike traditional venture funds, you don't need accredited investor status, and there's no long-term commitments. Access to these early stage companies from all over the world are accessible to all shareholders and investors through VST. Quick snapshot. As most of you know, we have a diverse portfolio of companies in a variety of different sectors, including digital health, artificial intelligence, machine learning, blockchain, virtual augmented reality, gaming, climate. Our NAV, as at the end of September 30th, was approximately around 73 million Canadian dollars. I think our market cap, as of the end of the trading day yesterday, was around 8.4 million Canadian dollars. So big discount there between the NAV and our market cap. And even if most companies that are like VST generally will trade at a discount to NAV, but an 88% discount to NAV is fairly significant of a discount. There's currently about 5 or just over 5 million Canadian in cash and liquid securities, and VST has a strong inside ownership. My CEO ownership is around 15% of the company. So again, there's a lot of skin in the game. Our team comes from a variety of different backgrounds within the technology space, from development to growth to accounting. Team is founded over 40 companies in over 24 countries, reaching over $1 billion in enterprise value. We had a strong partnership with an incubator here in Western Canada called Launch Academy, and what this did is this allowed us to identify some of the top entrepreneurs and startups from around the world that were able to leverage programs like the Startup Visa program, Shred, IRAP, to provide these companies with non-dilutive funding, and also a lot of perks from AWS and Google and Microsoft Azure through these services. So one of the benefits for our portfolio companies is in addition to getting access to a strong team of people to help them in their development and journey, a lot of non-dilutive grants, tax credits, and perks from companies that we were able to kind of leverage for them. Where are we at today? This is a slide that people have seen in previous webinars, we've evaluated over 1,000 companies in entirety. There are about 25 in the portfolio, about $13 million Canadian of invested dollars. Uh, the VST revenue projection for this year, I think we're tracking at around 22 million Canadian. And as I mentioned earlier, the NAV, which is unaudited, is probably around 73 million Canadian. How is the NAV calculated? We get this question. A lot of people have questions around the NAV. They don't understand if the NAV is what it is. Why is the company trading it at such a significant discount? I can't answer that question. I don't know. But what I can answer is that the way that we calculate our NAV is kind of broken down into three categories. Public companies, which really that number is taken the number of shares that VST owns in those portfolio companies that are public, multiplied by whatever the share price was on at the end of the trading day, I think at the end of September, or I think approximately September 30th. So not taking into account anything other than like what that last trade was, even if the company is, for example, thinly traded, we still take that amount. Then from a private company perspective, so every year we provide financial statements every quarter, and then we have audited annual financials that are done by MNP, and there's third-party companies that MNP brings on to evaluate our portfolio companies that are private. So VST's ownership in those private companies, based on third-party valuations that were done for our annual audit, term sheets that were on those companies, and in some small cases, management reviewed where the companies were just too small to pay for a third-party valuation. We just review them as management. That total is around 48.9 million Canadian. And then there's incubating. So we're always incubating IP in-house. We're leveraging pieces of software we have. And a lot of times we're tinkering and building things. So within our portfolio of companies, it's so wide and diverse that we're able to kind of identify pain points in some of those sectors and then build solutions for them, and in the hopes of like being able to sell some of that IP. And those incubating value of companies, is generally management reviewed, and we value those assets at around 9 million Canadian dollars. Just as a note, Block X, some IP that was recently sold in a share transaction, in a share sale, came out of that portfolio as well, as did a VPN piece of IP that we sold years ago. So there's always interesting IP that's kind of being incubated in there, and that's kind of where the total comes from. This slide I wanted to reference because this was a slide that was from our last webinar in May. And I kind of wanted to I thought a good thing would be to kind of highlight what we shared and where we're at and what an update is since then. So first thing was Hydrate. We talked about, Hydrate. Their goal at that time was to get to profitability by Q4 of 2024. And they had just recently released their 2023 annual financials, which hit them at around 17 million in top line revenue. This year, they're on track for over 21 million. They had a news release today that had some data points there from their most recent financials and kind of their forecast going forward. But again, we feel with Hydrate, operationally, the business is chugging along and going well, and we're really happy with the operational progress of it. Stardust Solar, we mentioned that we were aiming for a public listing. Thankfully, we've listed. It listed on October 7th, I think it was last week. It was a very, very long journey to get it listed, but we got it across the finish line. We're happy. We believe in the climate tech solar space for VST. We're a significant shareholder in Stardust. The value of our equity in that is significantly increased from what our cost base was when we made the investment. But again, we're happy that it's public. We think that, with the US election in November and the infrastructure bill, we think that there'll be a lot of momentum for that category. And we think Stardust management's strong, and we think they'll they'll have a strong 2025. So we're very happy that got across the finish line. XR Immersive, we talked about the digital twin AI avatar clone and some of the new IP. We released it. That's been a really, really slow progress with XRI. We're not exactly like excited or happy about that company's performance, but and how slow they've kind of progressed. But again, we're there and we're still supporting them. We're still bullish on it. They've been working on a number of tools, and given VST's exposure to the digital health space, they've been working on some AI and VR tools around the healthcare space that they've been playing around with, and they think they're starting to get traction there. So that's something that I think we're going to help them with, giving them access to our kind of wide distribution network of partners in the health space to help test and pilot those out. We referenced Game On at the last webinar. There was a token listing that they were planning. That token, I think, listed in June, on June 3rd. So the game token was listed. It opened well, but again, like with a lot of crypto, just kind of crashed shortly after. And for us, it's kind of just a wait and see with that. But it was a milestone and a catalyst that we talked about. So wanted to update that it happened. Copilot AI, again, it's a private company within VST's portfolio. Really, really strong team. It's been in the portfolio for quite a while. We've seen a significant increase in the value of VST's ownership, equity value in Copilot. We had a webinar with Jesse Chen a couple months ago. It'll be up on our YouTube channel if people haven't reviewed it, but check it out. When we last talked to them, the plan was that they were preparing to do a financing this year. They had significant opportunities to do so at a very, very strong multiple. But they decided to pause that fundraising round until next year. They started to see growth and traction out of new products that they'd launched and new markets that they'd launched into, specifically the Asian market. So they've kind of paused that fundraise, and I think they're going to explore it next year, which they think that the market's going to rebound and valuations in the SaaS sector, in their sector specifically, are going to increase, and they're going to explore it then. Insu Therapeutics, we talked about it. It's a portfolio company that I'm probably most excited about next to Hydrate, primarily because there's a patent there. It's a partnership with a really, really well-known university that's produced a lot of strong companies in the life sciences health space. The comps in the sector are really, really high. And it's a global market. The patent around taking injectables into a buccal oral format, starting with insulin, they're now looking at GLP-1s. I just think the market opportunity is great for that. We are going to be looking and assisting them with fundraising and spinning them off. That's going to be a really big priority next to Hydrate for VST. VSDH, we talked about. In May and June, they were soft launching a healthcare platform in partnership with two other groups, one being Hydrate, that would help companies launch a D2C healthcare brand in all 50 states. Soft launch was in May and June. There were over 200 licenses sold within the first 90 days. I'll get to why that's important for VST in the next slide, but that was significantly better than we expected. And the momentum has just continued with it. Another portfolio company that had been in the incubating kind of section, VST.ai. VST.ai had built some AI-powered tools for vet professionals and animal hospitals, and just creating efficiencies within those categories, and just new IP and tools that vets could use. There was an LOI signed with a company on the NASDAQ, the ticker is IVP, where they're in conversations with them to progress on a deal. Or ever since that deal was announced, Vetsy's had a number of other suitors come to the table, and so I think they're, in addition to that potential acquisition that was released by IVP, they're also exploring other opportunities as the interest has kind of come. So from a VST perspective, strategic focus for us, there's really four things that are really, really important for us right now. one, Hydrate's growth. And why this is important is that VST is the largest shareholder. I think we have probably 26, 27 of the 40 million shares in Hydrate. We're actively involved in the company. Um, Anyone that's followed the story, the revenue growth year over year for the 4 years since we've owned it has been significant. Uh, they're tracking to do 20 to 24 million this, sorry, 20 to 22 million this year. The first 6 months are already booked. Actually, the first 9 months are booked. Q3 financials for Hydrate will be out by on or before November 30th. But they're tracking well. So, 3/4 of those numbers are already in the books. They've communicated to the market that they're expecting profitability, GAAP profitability by Q4 of this year. And within our own internal estimates, we're expecting that growth to be even more significant in 2025. What's very important for VST there is that the average multiple for digital health or telehealth companies, and that's the average, not for ones that are tracking at the exceptional growth that we believe Hydrate has been, is 4.7 to 5.5 times revenue. So, this is an asset that is really, really valuable within our portfolio. You try to get singles, doubles, triples, but we think that Hydrate really is going to be one of those that's right now. It's looking like it will be a home run for VST, and we don't want to take our foot off the pedal. So we want to put all of our resources behind trying to give it the best shot as possible to continue its growth, because it will ultimately benefit all of us VST shareholders. Cash flow. So cleaning up the balance sheet and cash flow are important priorities for VST. Anyone that's followed or been in the stock for a while has seen that since 2021, the share price has kind of been in a decline. Thankfully, we've not thankfully, the share price has been in a decline. It sucks that the share price has declined, but we haven't had any sort of dilutive events. We haven't had to go to the market for funding or anything like that at these levels to dilute shareholders, which I'm the largest one. But as we go forward, what's important for us has always been to build a sustainable business, meaning that either we're cash flowing or we're getting liquidity from portfolio companies as they've kind of left the nest and appreciated, to be able to reinvest into new opportunities. So from a cash flow perspective, one of the pieces of IP that we've really been focused on, and this was referenced earlier with VSTH1, it's a partnership with Hydrate and another, where this healthcare platform is really focused on the D2C space. Soft launch May, June, 200 licenses sold within the first 90 days, and we're expecting about 1,000 licenses to be sold by the end of next year. So VST is really looking at this and is really focusing on this being a big driver for cash flow for VST to be self-sustaining, and to also be able to invest in new opportunities as we see it. Liquidity is another big thing. So again, since 2021, the values of our portfolio companies has declined. We've started to see overall markets starting to pick up a little bit more interest. We're expecting next year to hopefully be stronger. What we want to do is also be in a position to explore liquidity by looking at some of the publicly traded assets we have that we're not actively involved in, for potential liquidity opportunities next year. So again, one of the things VST will look at next year is if the market starts to turn around and some of those companies, the share prices start to appreciate, VST might explore creating some liquidity there to bring additional cash flow back into the company to be able to use strategically at that point. And just two things, strategically, what I mean strategically, one avenue could be looking at new opportunities. The other could be, an NCIB to buy back stock, other things like that, which is, why we want to be very strategic and focus on cash flow and potential liquidity opportunities. And then I mentioned earlier spin-off. So next to Hydrate, Insu is the next company that I'm super, super excited about for a number of reasons, from market opportunity to the patent to the partners in the management team, including Dr. Tom Elliott from BC Diabetes, Ahmad Shorbaji, who worked at Sanofi, who are both on, I think, and Dr. Anubhav, who if anyone's in Vancouver, actually, as a side note, or anyone's visiting here, I would love to take you to the University of British Columbia to meet Dr. Anubhav, who's the real brains behind the patent and the IP here, to actually see how everything works. It's pretty exciting. But that again is I feel like the only way for us to really unlock value for VST is to fundraise and spin that asset off, because I think within VST, there's really it's not really unlocking any value for VST shareholders. So that's a big strategic focus for us. We want to stay kind of hyper focused on these four elements because we think it'll put the company in the best position for shareholders. Why invest in Victory Score now? Again, entry point, unaudited NAV, is around 73 million. Market cap as of yesterday is around 8.4. Huge discount. When you're buying VST, you're actually getting access to a number of different portfolio companies, from Hydrate, to Insu, to Copilot, etc. So, you're getting a couple of different shots at goal with one shot on goal, but multiple chances to score. And that also gives you that diversified risk-adjusted approach. One of the challenges with microcap stocks is there's a high failure rate. And if a company is focused on one thing and it doesn't work out, it's very, very challenging for shareholders in that case. Whereas with VST, on any given day, a couple of companies might be down, one is up. And there's that balanced portfolio that really, really ensures that you've got a diversified kind of risk-adjusted approach. We've got experienced leadership and active investment management. We're actively involved in our portfolio companies that are focused for us, and there's skin in the game. And it's public, right? There's liquidity through the fact that the company's listed in Europe, in the US, and on the CSE. I'm going to get to the questions now. So I wanted to just kind of quickly take everyone through there, and I'm going to get to the questions. Give me a second here. Just get myself organized. Okay. I'm going to... Hold 1 second here. I want to make sure this is recording still, guys. Is my screen still being shared? Can someone just let me know? Okay. So give me a second here, guys. Just trying to get out of this. Okay. So first question, can you provide insight into the NCIB for Hydrate and when they will start buying back shares? So the NCIB was announced, I believe, last week. The company has started to buy back shares, and I think at the end of every month, there is a statement on exactly how many shares were purchased at that month. So I think that happens at the end of every month. In the news release that was released by Hydrate, I think last week, it indicates what the parameters of how the company can buy back stock. So I know one is, I think there's a small percentage that it's allowed to purchase back, which I think is around 2%. But again, don't quote me on that. The news release would have the specifics as to how it's done and which brokerage firm it's done with. And I think they release the buys at the end of every month. Do you have a notion of when Hydrate will have GAAP positive earnings and cash flow? So cash flow wise, I think they started to hit positive cash flow in Q2, and I think that's continued on to Q3 and will continue onwards. I don't know if it was in this release or their previous corporate update, but I think they're anticipating positive GAAP earnings by Q4 of this year. Can you tell us more about the Hydrate contract involving US government agencies? So I can't talk too much about that, but what I can say right now And Hydrate will release information on that, so that's why it'll come out kind of organically through them. So I have to be very careful, as that they're also a publicly traded company. Um, but what I can say is that Hydrate's got a contract with a company that specializes in connecting companies to government agencies, and they've done this for years. And their interest in Hydrate was specifically around government agency opportunities within the health space and sector specifically. And they identified Hydrate. And why that's important, for anyone that's in our Discord channel, I shared some content about a week or two ago. And why that content's important is that one of the biggest opportunities, specifically in the US, consumer opportunities, is the healthcare sector. And in sectors like that, not only are they large sectors, but it's a very fragmented sector. So if someone wants to build something nationally, uh, infrastructure becomes really, really key. Hydrate spent the last 2 years, as I think many of you have heard Shane talking about and Vicky talking about this in webinars and in through news releases. There was a lot of focus on building infrastructure to allow for services in all 50 states. And so one of the huge advantages they have right now is, as companies start to enter this healthcare space, which they are, um, uh, they're going to need platforms like Hydrates to operate on a national basis. So this company saw huge opportunities, especially with respect to government contracts that are federal of nature, could really benefit off of the platform that Hydrate's built. So Hydrate itself will communicate more about the specifics of that, but that for us is exciting. Sector is huge. Hydrate's a first mover with respect to building infrastructure, and that company has a storied history of securing large government contracts for companies in general, and they've sought out Hydrate. Please explain the VSTH1 partnership and the business opportunity it provides for VST. Uh, is this announcement part of the telemedicine in 50 states, or are they different enterprises? What is the revenue potential of the 200 licenses sold over the past 90 days? And do you expect to sell more licenses? So there's kind of like three questions tied into one. So the first is, the VSDH1 partnership and business opportunity is part of the announcement of the telemedicine in 50 states. So it is part of that same thing where VSDH, Hydrate, and another partner have built this platform that's called VSDH1. It's really targeted towards helping companies build direct-to-consumer healthcare brands in all 50 states. That's all around the same opportunity. Why it's significant is VSDH is wholly owned by VST, and the other partner, Hydrate, VST is a large shareholder of. We believe that this will be, like I mentioned in the slideshow, a big revenue driver for VST. So we expect it in 2025 to generate significant cash flow for Victory Square, and that cash flow is what we're projecting to keep the company self-sufficient, and also put it in a position to be able to use its own cash to invest in new opportunities. Again, big thing there is to avoid any sort of dilution to shareholders. What is the revenue potential of the 200 licenses sold over the past 90 days, and do you expect to sell more licenses? I can't really go too much into the revenue breakdown just because it involves two other companies, one of which is public. But what I can say is that, and I mentioned earlier, the expectation is to have over 1,000 licenses by the end of next year. So we do expect to increase that number, and every month the number of licenses is jumping. The 200 within the first 90 days, that pace is still continuing, and that momentum is still continuing, and we're expecting that to be at around 1,000 licenses by the end of next year. Now, without going too specifics into the revenue potential, I can talk about how that revenue comes about, and it comes about from the selling of licenses, doctor visits, and prescriptions. So those are three of the ways that three of the different revenue channels from each of these licenses that we're expecting. And Again, VSDH, which is wholly owned by VST, is a major partner in there, and so we're expecting it to be a significant driver of revenue and positive cash flow for VST next year. One barrier that is keeping investors away from investing in Nurse is the unusual capital market structure and complicated financial statements. Is there a way to improve this or educate potential shareholders to calm their concerns, especially regarding related party transactions? So yeah, we're aware that it's very complicated, as is VST's financial statements. I know that I know that Shane has been speaking to investors and to investment groups that have investors underneath them, who've had questions, these specific questions, where they've been able to actually walk them through the business model, and which kind of explains why, why the related party transactions are as such, just given that, again, things have to flow through the medical director of the PC friendly network, et cetera, et cetera. So I think the feedback they've gotten, they've started to explain it to certain investors and large investment groups. And the feedback is to add additional disclosure notes in the financial statements themselves to provide further clarification and explanation. So I think they'll continue to focus on this by providing more information within the financial statements that help guide and walk through and explain those items, because they've been brought up more than one time. And then two, when financials are released, to have a webinar, again, walking specifically through and breaking down those elements for shareholders. I think through those elements, that information and education will be out there. So again, walking investment groups through that have kind of followings underneath, where they understand and get it, to provide more disclosure notes within the financial statements themselves. And then three, after financials are released, to further do a webinar that kind of walks through the shareholders through that. I think that'll do a good job at that. I was surprised to see the sale of the Block X asset to Edge TI. Tell us how this transaction came about and why Edge TI purchased it. Does VST plan to hold the shares long term or look to sell the position to redeploy the funds? So, in the slideshow I mentioned, there's a category that we have called incubating, and we're always, from things that we build, things that we buy, we always keep a lot of IP in there, and we tinker around with it. And one of the areas that we've tinkered and built a lot of IP around is within, I would say, the cybersecurity and crypto space. And in both of those spaces, we're really not focused on those spaces them ourselves, internally, because we've been so, the digital health sector space and life sciences sector space is one that we've been focusing more of our time on. So with this IP, there is a value, and we saw that, we have a lot of familiarity with the Edge Total Intelligence team. We like their management team. If anyone's looked into their management team, they've had success before. They're really, really well-versed, high pedigree management team. They've got really good contracts. They've got ARR, they've got revenue. If anyone's kind of gone through their financial statements, they've got a very tight capital structure. They recently closed a financing, so they've got cash as well to work on their business. And for us, because we weren't really doing anything with this IP, because our focus was on the health space, we thought this is a great opportunity for VST to take an asset that's really kind of zero on our books. It was really me working on it and keeping it going, to sell it and give VST shareholders an opportunity for a large financial gain. We never know when you do these share transactions, whether with microcaps, whether the shares are going to go up, shares are going to go down. That's not something we can predict, but we can look at capital structure of the company, management team, addressable market, the product, all, financial position. We looked at all of those things, and we thought this would be sitting at zero in our books. This gives us a chance to turn it into something with, with all those check marks, and let's do it. So that's kind of why we did that transaction. And do we plan on holding the shares long term or looking to sell them? I think that over the next 12 months, we mentioned in the slideshow, if the markets pick up, if the markets pick up, the microcap space specifically, they've been down for 3+ years. So I think we would look towards taking money off the table and creating liquidity. In this, we obviously would never do anything to hurt the market of a portfolio company, but I think we would strategically look to liquidate, some of our position to redeploy into new opportunities. There are a couple of areas that we see that I see specifically, the next 12 to 24 months, and good opportunities to kind of uh, get into nice places before the rest of the markets kind of jumped into it. And so we do see some opportunities we'd love to redeploy funds into. And so I think we would look to liquidate, as we mentioned in the slideshow, in 2025. Is there any news to share regarding the VST AI asset or Insu Therapeutics? So with VST.ai, I mentioned there was a NASDAQ listed company, IVP, that VST signed and they signed a non-binding LOI with, I think in August. Their VST, from our knowledge, is either going to complete that transaction, or they're going to look at other opportunities that have kind of come across their table. Just a side note on that is, I think there's a tremendous opportunity in the pet space. 50% of homeowners are pet owners. Anyone that has a pet, we have 2 pets. My wife and kids spend, I think more money on the pets and more attention on the pets than they do on me. So, and I think that's the case in a lot of households. I see a huge opportunity there in the pet space specifically. We have been incubating IP in that space, specifically around compounding pharmacy products for the vet space. So I really love that sector, and I think we're going to be involved in some capacity, either way, in that category. With Insu, again, super excited for Insu. Insu right now is doing a fundraise and will be concurrent with a spinoff. And again, like I mentioned, anyone that's in Vancouver that would like to come to UBC and meet Anu and the team and Dr. Tom Elliott and Ahmad, please let me know. I'd be more than happy to coordinate that. And I think it's in those types of visits where you really get an opportunity to, it's one thing to see a deck or, go onto a webinar, but like to actually go and see the science and work and meet the professor and go to the lab. It's pretty exciting on that. And just again, a side note to that, my communication with a lot of people has been by news release or webinar, emails. Every opportunity I've had to meet an investor in person, like Jeremy Diller, who's just recently here for Planet Microcap, it's great. It's great to actually talk to people in person and be able to, see that we're real people and talk about the products and services that, and meet other members of the team as well. So if anyone does find themselves in Vancouver, again, please let me know. Anyone that has reached out will know that I'm always open to meeting up for coffee or lunches. Are there any more liquidity events on the horizon for VST? Can you see VST reaching cash flow positive in 2025? Liquidity events, I think the focus for us, like I mentioned, would be from a liquidity event, would be exploring, and I think this will most likely track into 2025, where we will look to liquidate some assets in the portfolio. Can you see VST reaching cash flow positive in 2025? Our goal is to get to cash flow positive in 2025. Where that number can be misleading on VST's financial statements is VST's financials consolidate businesses that we have that are owned over a certain percentage. And sometimes when we're incubating new things, we're spending money on those things, which is listed as an expense. And so the nature from a financial perspective might look a bit different, but from a straight cash in, cash out perspective, our goal is to achieve cash flow, to be cash flow positive by the end of 2025. Oh, sorry, one note on that too. I just want to reference, when people look at our financial statements, again, it can be misleading for good and for bad. People will notice that we'll have a net loss or a net income gain or loss. And for good or bad, if the value of our assets go up, even if we're not selling them, if the value of our publicly traded assets go up, from a quarter-to-quarter basis or annual basis, then there's, in some cases, a net gain, but it's just a paper gain. And vice versa, like in the last 3 years, the value of our public assets have gone down just because the share prices have kind of gone down. So you've seen this net loss, which again is just a paper loss. We're not selling the asset, but that can work both ways. So just our financial statements are a little bit challenging, and I need to do a better job of providing more notes and guidance after the release. But yeah, there are some stats in there from the fact that they're consolidated, but also the net income gain and loss sometimes is more of a byproduct of just a change in the value of the assets on a quarterly basis or annual basis. Oh, there was a second part to that question. Would it make sense to buy back shares? This is something that we'll explore next year. I think for VST, our Q3s come out on November 30th, I believe. And we have some things that we're trying to accomplish by the end of this year. As we go into 2025, if the share price is still, dwindling and sitting at these levels, and we are seeing that cash flow that we are projecting and expecting, and we do see that liquidity that we're projecting and expecting, I think we would look to for VST to issue an NCIB and start to buy back our shares. VST financials are very confusing. Will the company take steps to clean up its balance sheet? Is there an opportunity to deconsolidate VRAI's financials? Okay, so I kind of talked about this before. Yeah, so our financials are confusing. The steps that we're going to take to clean up the balance sheet, we already started to do that in Q3. So one of the big focuses for us was to do that. One of the things that I need to do better, I mentioned earlier, is more notes and disclosure in our financial statements to like provide more guidance on how to properly read them and us breaking things down. Two, again, a webinar immediately after they're released to provide more color and answer specific questions, so that everyone's kind of clear on what everything means. And then I think the third thing, third question here, which is the opportunity to deconsolidate. I believe that VRAI is going to be deconsolidated in our Q3s. We've pushed for that, and with the auditors in the back office, and I think they're going to be deconsolidated. I mean, that's what the request that we've had, and it should be deconsolidated. But when you're dealing with auditors, you never know how they're going to view or evaluate things. But from our perspective, it should be deconsolidated. Okay, next question here. Why are our professional and consulting fees so high as a percentage of revenue compared to many other companies? This is a great question, and this again is one of those things that we need to do a better job of explaining. So VST's financials are consolidated. So you'll see professional and consulting fees from Hydrate, from VRAI, from BlockX, from all of the companies, VSDH, all of the companies that are kind of wholly owned. If you were to look at just VST proper, the fees are actually significantly low compared to revenues. So I think the best way for me to answer that question is that they're actually not high, but the reason they appear to be high is that our financials are consolidating a bunch of different companies' information in there. And what we need to do to provide clarity on that is to have it broken down. I think what I'm going to aim for, again, I mentioned Q3s come out November 30th, is for us to kind of provide more disclosure in the financial statements to break that down so that people can, from a VST perspective, get a better understanding of that. The market does not agree with the NAV, and profits would make a big impact. So when will VSQTF make it profit again? And as it's been almost 3 years since a profit was realized. Yeah, I mean, a good question. The plan, VST works in these cycles, right? You build up these portfolio companies, and at the very beginning, you're putting cash in to kind of build these businesses up. Then at some point you hit a flywheel, and that flywheel hits, companies spin off, start to turn, significant revenues, or their valuations go up, and then VST realizes a gain. And if you look at our history, we had that from 17 to 20 was like this build and cost build up. then all of a sudden the markets kind of picked up and companies were spun off, and you would see that gain. Uh, and then 21, 22, 23, and most of this year, you would see that loss, and that loss is more of a byproduct of the fact that the value of those companies has changed dramatically. Not to say that today's is true or the high is true, but we believe somewhere in the middle. So I think there's a couple of things. One, as we go into 2025, I believe the numbers will just organically get better because we're not making tons of investments anymore. We're being very, very hyper focused. Um, and I believe you're going to start to see some of our portfolio companies, not all, but some of them really start to hit their mark, and that'll unlock value for VST, coupled with the fact and the focus on cash flow. So I mentioned VSDH and our plan of cash flow and liquidity in 2025. I think that's going to contribute to the positive gains on our balance sheet. Plans for share buyback or cash dividend in 2025. Uh, I can't see a cash dividend in 2025. I just want to be honest. I think what we would do, which again is in essence kind of like a dividend, which is a share buyback. I think that would be where we would explore if we don't see any sort of like if what we expect to happen over the next 3 quarters with Hydrate's growth, Insu being spun off, cash flow from VSTH, and liquidity next year, or even without that liquidity, we would start to buy back our stock if it doesn't move. So yes to that, and I think we would prefer the share buyback as opposed to the cash dividend. And just to know, the cash dividend would be a taxable event for shareholders, whereas the share buyback wouldn't be if you don't sell the shares. Please talk about the debt for VST on the books and timing it'll come due. So the only debt that VST has on its books was a strategic loan that we had taken on, and that's kind of with a strategic partner who's also an investor in a bunch of our other portfolio companies. Um, our arrangement with that investor is to continue to extend that as we collaborate together. So that investor right now, we're working on 2 other projects. That investor is an investor in VST, Hydrate, and VRAI, and is also looking at Insu. So VST's debt will most likely be cleared by the end of next year. But right now, it's a strategic relationship we have with an investor that's kind of collaborating on a number of projects with us. How does Hydrate make its revenue from the VSDH1 structure? Again, this is a question that I prefer like specific Hydrate questions. That it's better that Shane answers them, but it'll be very similar to how VST does. The VSDH1 platform is co-owned by 3 groups, one being VSDH and the other being Hydrate, and another partner on the payment processing side. And so they'll all make revenues because the ownership is kind of split equally. So just how VST will make money because VSDH will get generate revenue from licensing fees, visits, and pharmacy. Hydrate will as well. Is there any other US company that does what VSDH1 does in terms of helping companies sell GLP-1s legally nationwide? Is VSDH1 the first mover in this area? Again, this is a hard question for me to answer. This is more of a Hydrate question. But what I would say is that Hydrate is one of very few, if any, that can sell nationwide. Really, a lot of time was focused on infrastructure. And we know that there are some large US telehealth companies that a lot of people would recognize that they themselves have to leverage other PC networks and compound pharmacies to be able to get nationwide coverage. So what Hydrate is doing, what VSDH1 is doing, is very, very, very unique, very, very unique solution that I'm not aware of any other large competitor doing anything similar to that. We do know of very like regionalized ones, and we do know of ones where the cost is absolutely ridiculous to do it, and that's been one of the big benefits that VSDH1 has had. VST market cap looks like less than its Hydrate holding alone. Hydrate had a nice bump today, so I haven't looked at what the increase is, but yeah, the VST market cap is probably less than our holdings in just Hydrate and Edge, um, which is Control, sorry, like just those two. Our publicly traded holdings alone are probably, I think in the slideshow, are about 15.6 or 15.7 million. So like we're already trading just on those alone at a 50% discount. So not including Insu or Copilot or any of those other assets. So yeah, I mean that's true. It seems like the VSTH1 part of the news release flew under the radar. Is there any other platform like this in the market? What is the low-hanging fruit from them, and what is the long-term potential? Yeah, I think we will have more focused news on that platform, because I do agree with you. One of the good things now is as more eyes are coming onto the Hydrate stock, I think we'll set up a webinar to kind of break down some of those categories and explain them to shareholders and potential shareholders in more detail, which I think will be great. And again, the low-hanging fruit for them really is the fact that like there are so many companies, medical spas, so many smaller players that want to come into this sector and space that just can't, because A, it would be too expensive to build in-house, and two, there's no other provider that's providing national coverage. Just as a side note, one of the reasons franchises in the US prefer to use Hydrate, or in some cases VSTH1, is that if you're a franchise and you want to sell franchises nationally, you can only do so if you have uh, a network that can provide national coverage. And to build it from scratch takes a long time and is very costly. So that is one of the really, really strategic advantages, is that they all need to use a platform like VSTH1 or Hydrate on larger scales. Uh, is VST actively involved in the Game On business, and how do you think that portfolio company is doing? We're not actively involved in Game On. We really can't, I mentioned this, I know a lot of questions have been asked around that. Uh, we will, I think we'll have an update from them shortly, but those questions, are probably better asked directly to Matt Bailey. I agree that share buybacks are far superior to cash dividends. Yeah, agreed on that. So there's some more questions here. Hold on. Insu has a fundraiser. Do you have a contact for that? I do. I can get if someone sends an email, if they can send it to my email address. So my email address is my first name Shuffin, SHAFIN, at victorysquare.com, and I can connect you with Ahmad Shorbaji and Dr. Anu on that, and they can provide as much information on that on Insu. Would it explain the Insu spinoff? So the Insu spinoff. So we're exploring. I can't go into too much details about that, but what I can say is there are large groups that love that business, and have already kind of put together the capital for it. We've obviously got allocations for anyone that's connected with VST, so all VST shareholders would have an opportunity to participate in that. But the mechanism of listing right now is one that's of the listing part of it is one that's being explored as to what would be what would be best. Thank you. Just got a very positive note from Brandon. I really appreciate that. No, and thank you everyone. I think I've got to all the questions. I don't. Oh, there's one more here. With so many VC firms buying undervalued Canadian microcaps, are you tempted to take VST private? I would not want this, since the NAV is currently around 6 to 8 times higher than the current market cap. This is a really good question. Just to note, so uh, this is something that it had been suggested to me at the beginning of this year. So when I started to buy back stock, a certain percentage every day, the suggestion to me was, VST is trading at an all-time low. Why don't you take this company private? I mean, we know what's happening within the business. We know the big opportunity. But my response to that was, yes, it would be beneficial for me personally to do that. But my motivation with VST, I'm a shareholder. I'm not selling stock. My motivation with VST was the whole purpose of this was to create an opportunity to democratize access to these portfolio companies in one stock that people could trade at their leisure, buy it, sell it, not be locked in, and to buy $50 or $500,000, whatever they wanted to. So that was the purpose, was to build a microcap company initially that would allow for investors all over the world to invest into these early stage companies in a variety of different disruptive sectors in a manner that's audited and financial, that they didn't need to be accredited, and that they could buy and sell at their leisure. That's my goal, and that's what I'm motivated by. It's not just to, gain, gain for myself. Uh, Anyone that's kind of, taken the time to speak to me or done any sort of due diligence on kind of like what I did prior to VST. Financially, that was not the big motivation here. Otherwise, I would have sold all the stock when the market was up. Like that is not the case, and not the motivation. The motivation here is for those shareholders that take the time to read the financial statements, listen to the webinars, provide feedback and constructive feedback too. Like I understand we're not doing everything correctly, but provide constructive feedback. I believe those shareholders will do well over time. Because again, I believe in the value of the assets that we've built up. So to that question, yeah, it would be great. It would be financially great for me or the management to do that, but that's not the motivation. We really want to allow for shareholders to, especially shareholders like Brennan, who just mentioned, who's been in the stock since 2016, or shareholders like Ben or Jeremy or others like, that Sheldon, guys, the people that have reached out and asked questions. We want them to be able to, to be part of the turn. And anyone that's bought microcap stocks before, like it's the cyclical nature of the beast. Like you see it go up, you see it come down, you see it go up, and for us, it's been 3+ years of like down. We feel that in the microcap space, like the tide's got to turn at some point, and we want to make sure that that all the shareholders that have been like supporting us get an opportunity to ride that wave up. I've gone over, guys. I really appreciate everyone's time. I think I answered all the questions that were sent in and that were posted online. If I didn't get to anything, please email me directly at shafin@victorysquare.com for any more information. And again, we'll try to. Today was a good day. Hopefully that momentum continues. Thank you, everybody. Have a great day. Cheers.